The next two lessons will be structured a little differently. We want to emphasize some of the best and worst financial modeling practices. There isn't a right way to build a financial model. However, there is a wrong way to do it. That is why we'll list some of the worst and some of the best practices that have been agreed as a standard. So, in this video, we'll talk about worst practices, things we shouldn't do. And then, we'll switch to a more positive note, and we'll talk about best practices. Right. So, let's start then. Worst practice number 1. Do not write formulas with embedded constants. This is a beginner's mistake, and it is totally obvious, right? We shouldn't have constants in our formulas because this makes the model less intuitive, less logical, and hence difficult to work with. Constants are hidden, and it is easy to forget we've used them, so we should never use them in our formulas. Every input should have its own cell. Agreed? Okay, good. If you do, we can continue with worst practice number 2. That's a fairly obvious one too. Do not split your model across multiple workbooks. If you do, things become complicated. You have to have all the workbooks in the same folder. And then if you want to see a part of the model, you have to switch between workbooks, which hampers visibility and makes things less intuitive. Worst practice number 3. Things we should avoid when building a financial model. Do not hide columns in your model, and I mean hide. This can be confusing because a person must be super careful and notice that a column has been hidden here, right? If you don't look specifically for column E, you wouldn't notice it's been hidden. And models should be user-friendly. Everything should be crystal clear and super easy to understand. Number 4, here we go. Avoid calculating items already calculated somewhere else in your model. Why? We will obtain the same number if we carry out the same calculation, right? True. However, we are also carrying out the same calculation twice, and that's unnecessary. In addition, it makes the model more difficult to read. So, let's say I calculate a firm's dividend payments in the equity schedule of a model. Then I need to use the dividends figure when calculating cash flows. Should I use the ready calculation I have here? Or should I open the cash flows sheet and calculate dividends? The first idea makes more sense. Good. We've arrived to worst practice number 5. This is very important. Please pay attention. Never, and I mean never, submit a model that doesn't have the appropriate checks. There are several ways to test whether you've worked correctly. But first, remember that you should never build a model that doesn't have checks. Okay? What kind of checks can you use? First, the balance sheet must balance. Assets must be equal to liabilities and equity. If that's not true, then you've made a mistake. This is a good check, actually. The balance sheet, income statement, and cash flow are interrelated. So if you get the balance sheet to balance, chances are you've worked correctly. However, you need to make sure your inputs are correct too, right? What if you made a mistake with data entry? Add a totals check below your P&L and balance sheet numbers. Check whether the total figure adds up. And if it does, the numbers are correct. Good. Precision is fundamental in financial modeling. Calculation mistakes will undermine your entire efforts. Avoid them at all costs. Number 6. Avoid using current sheet references in formulas. This makes formulas unnecessarily longer and more difficult to understand. We should aim to create a model that is as easy to read as possible. Things to avoid. Number 7. Try to use simple Excel functions, or at least functions that are easy to understand by intermediate Excel users. Overcomplicating a model makes it less friendly for people who are not as prepared as you are, which automatically means they will be more hostile towards your output, and you don't want that, right? Number 8. Use macros and VBA as little as possible. Formatting macros are okay, but anything too complicated will have the same effect as the one we discussed in point number 7. And here's number 9, the last rule we'll examine. Don't use different blocks. If 2016 is in column C in the P&L sheet, try to have 2016 in column C in the rest of the sheets in the model. This facilitates your work immensely, and it allows you to copy and paste easily later on when you work with the model. In addition, by maintaining a uniform structure, you'll improve the model's readability.